Hello everybody, this is Forex Live today, again with a weekend wrap up. Today is Saturday 8th of October 2011, brought to you by forexlivetoday.com, free website full of information, latest news releases. You want to find out what's happening in Europe, you want to hear of the latest country or banks to be downgraded, check it out, it's all here. Alright, straight into the charts, and the first thing we're going to look at is the S&P 500. So you can see after starting the week, continuing our downtrend, we have seen quite a significant bounce. Interesting that we kind of broke this range low here, but I guess we could say that the new range low is down around here. So it has bounced, and it was quite a significant bounce, to be honest, and a lot of bulls coming out of the woodwork. Perhaps some people who had short positions might have been taking some profits. Some modest, I guess, improvements in the economic data coming out, but nothing to get too excited about. In my opinion, the outlook is still considerably bearish. One thing to note, you can see how the S&P 500 stalled out much lower than the top of this range, and then on Friday, this candle here, we did have good NFP, non-farm payroll results coming on Friday. However, further downgrades kind of put a dampener on that towards the end of the day. But what I'd like to bring your attention to is the S&P 500 getting nowhere near the top of the range. However, if we look across to the UK, you can see that the FTSE, as well as not breaking the lows, it has got much closer to the top of the range. So almost testing the top of this range with the initial rise on Friday, before once again dropping back a little bit. People closing positions, all sorts of reasons why on a Friday afternoon you might see a little bit of unusual movement. Well, unusual for the rest of the week, but quite common on a Friday. So what caused this spike? Well, a range of things, but to be honest, we don't need to go too much into it. We know the overriding fundamentals. We're having continuing contagion, which is quite a concern. What I mean by contagion is the European sovereign debt crisis is not limited to Greece. We have Moody's, Fitch, and S&P, the three big rating agencies, downgrading a lot of banks. They're downgrading countries, and the countries and the banks that they're downgrading are spreading. And this is what contagion is. When you cannot control the fire, it starts getting out of your hands, and this is what the fear is, and this is why markets are so kind of nervous at the moment. Looking across to the euro dollar, starting with a long range chart, you can see here we have our rising trend line, which was broken and has since been retested. Now if I zoom in, you can see how beautifully really this technical pattern is playing out. Now what we want to look for on Monday is some more downward momentum. The euro at the moment is playing to risk sentiment versus risk aversion, but it is moderated a little bit because of the liquidity in this pair. You don't see really sharp movements that you might see on the Aussie dollar, for example, but it does move in correlation with equity markets. So we can see broken, advanced, and retest of these two significant supports. Now, on Monday, if we see further momentum to the downside, I will be short. If it breaks up back above this line here, I will be staying on the sidelines. The ECB, although some people expected the ECB to cut rates last week on Thursday, they did not. However, they are still very active in the bond purchasing market. So further stimulus and quantitative easing still ongoing by the ECB. Moving across to cable. Now, cable. We can see that cable has bounced from this support, horizontal support here at 153.40. If I zoom in further, you can see it, even though it did break on the news after their rate decision, which we all knew was going to be a non-event because rates being so low in the UK, they can't really move down. However, they did in the statement talk about further stimulus. Now, this was expected. However, the markets did still react to it by selling off of the pound. However, it immediately retraced again. So this shows that it was really expected and priced in. Then on Friday, we had some further strength. So last week I mentioned about a pair trade. Short euro, long pound. Now, it was too early. We didn't get this the signals or the conditions for that trade last week, but we are almost in perfect position for it coming into next week. So look to hedge if you would like to, short euro, long pound against the dollar. Alright, looking across to dollar yen. Again, we have our rounding bottom pattern. However, excuse me, the floor that I had in at 76.30 has been raised. You can see here it's starting to bounce off this 76.50. So there are still opportunities here for 30 to 35 pip moves going long from these levels. Although it's not huge numbers, I mean, it's when you see consistency like this, make the most of it. Looking across to dollar Swiss. Now, last week we were talking about this bear flag here, and it did break up nicely immediately on Monday, but then went into a bit of consolidation for the rest of the week. Personally, I can see this losing momentum, so I am currently flat. I was long on the break of this bear flag, first thing on Monday actually, or early Monday, but I am currently out of this and not looking to enter any time in the immediate future. Okay, some other alternative trades, if that's not enough. We have the Aussie dollar, which I really am interested in. I'm actually more interested in this than euro dollar. You can see the broken trend lines and the retest on the way here. I have an article on the website which is following the setup and the levels to take these trades. I've been in and out a couple of times already. However, this is looking very good. You can see the long-term trend line here, a medium-term trend line here, and if we zoom in, we can see that it also seems to happen right around parity, an extremely important level. So a further bullish run up to test this, and any signs of stalling out and not piercing straight through this, and we will be short. I'm not saying it's going to get up there. If you see downward momentum, maybe this is as close as it's going to get. Remember, these areas of support and resistance are zones. When you're swing trading or medium-term trading, it's very difficult to get those precise levels. So remember, maybe the first time might get it wrong, second time might get it wrong, but if you persist, in the end you see larger movements like we are seeing here, and you can see this trend is just significantly down. The first level to have any sort of change would be above parity. You want to see a new high here before even considering that this downtrend would be weakening. Any more that we've got here? Oh yes, we have euro pound. Once again, we have our long-term uptrend. You can see on Friday when we had that strong day for the pound, you can see how much it's come back. So another test of this, again providing opportunities to the long side, or if it breaks, again this was a fake out here, but if it breaks, don't be afraid to get short. You might get it wrong, but if you get it right, you could see significant follow through. So that's more than enough to keep us busy for the next week. There's plenty of other pairs as well, Euro, CAD, Aussie Yen. However, don't spread yourself too thin. Keep focused on what you're doing. Moving forward, I think on Monday On the opening on Monday, we may see some downward pressure due to the fact that some of these downgrades came out very late on Friday after Europe was closed, so didn't have the opportunity to really react to them. If you do gap down, do not see that as a sign to enter immediately. Wait for the gap to at least partially fill before entering to the downside. Not often do you get gap and goes where it gaps down and then just continues without some form of retracement to at least partially fill those gaps. Lots to look forward to next week. Remember, the overall outlook for the financial sector in Europe, the debt levels in the US, the trends are down for risk. We may see relief rallies like we saw last week, but it's way too early to get excited if you are a bull. See you all next week. Good luck. Bye for now.